People consume loans in big numbers. And the biggest question is how you use your loan. What is a loan? Loan is basically an amount of money borrowed to be returned with interest. No one would give you a loan if there is no interest, unless you are getting it from your parents, from a brother, from a sister, or just from someone who just have money to spend and give it to you, or maybe from a very good friend. But if you are taking a loan, remember you have to pay interest. What you are doing with the loan is extremely important. So is it a good idea to take a loan to invest? The answer is yes. But I would like you to make a differentiation. Are you investing in assets? Are you investing in liabilities? Are you investing in things that do not help you? Basically, an asset in the modern definition is something that makes you money. If you're investing to buy a plot that you will appreciate, well and good. If you're investing for a home, people take mortgages to settle your own family. There's that sentimental benefit. Your family needs shelter. That is also important. Another thing is the fact that houses do appreciate if you buy in the right places. So it matters what you are doing in that loan. There are many Kenyans who are taking loans today. Their businesses go down with those loans because you are making money for the bank. It's barely enough. You take a loan maybe 13.5%, but if you look at the business you are putting that money, let's give an example. You take a loan worth 100,000, then you put it in business. If you check clearly, every month you're supposed to pay maybe 100, that is like 13%. Of course, there are repayments, but you are supposed to pay for every 100,000, you're supposed to pay like 13,500. If the business you are putting that money is not making profit enough to pay the 13.5%, and maybe return a profit that business is not worth. So that is not an asset. That's what we are trying to do. Make a differentiation. Are you borrowing to make money? Either in terms of capital gain, interest, dividends. If you are buying shares, be very sure that you make enough money to cover either the interest, the charges, the insurance, and many other things. What am I trying to say? You need to borrow money to invest. You need to borrow money to put it in assets, things that are making you money. If you make any calculation, even some things that we think are assets, they are not, because they depreciate in value. They might be assets, but in terms of the dictionary definition, but they depreciate in value. Those are the things that will make you lose money. If you are borrowing to make more money, you're good. You're borrowing just to consume with no particular importance. With some few cases, we have families, we need cars and stuff like that. You need to manage your budget so well, and you have covered this in the past, so that you have enough money to invest. If I was to advise, in my own view, from my own experience, you should be able to invest at least 30% of your monthly income, either in assets that makes you money for the future. You keep doing that. There are people who even do 50%. That tells you have to even keep making more, because you have to live a better quality of life. We're not telling you to make 10,000 for 10 years as your salary. You need to keep looking for more ways of making money so that you get more money to be able to invest. What precautions should you take when you are taking loans so that it makes you money? I would like to share 3. I think the first thing is to read, they say read the fine print, understand the particulars of this loan. One of the things is interest, and we usually advise when you're buying properties. I'll tell you, if I'm buying a property, I most likely will visit at least 3 properties or even more. I can even visit 20 when we are doing username projects, because we are taking care of thousands of people. The same thing when you are taking loans. Please shop for this loan. Different banks have different interest rates, different terms and conditions. You'll be very surprised that you have a bank that is offering something better. We also advise people, look into Saccos. Saccos are way better. And microfinances, some of them have very flexible terms that you can be able to get. Saccos are even better because they'll give you those fixed terms. Then you pay like 12% or even less for some Saccos for 5 years. You just need guarantors, you obey the laws, meet the terms and conditions for those Saccos which are way less than banks. But banks can be able to give you more. They can be able to give you faster than Saccos. You don't need guarantors. You just need your unsecured passive. So you need to shop until you get a guy. This is a bank, a Sacco, or financial institution that can give you a very good interest. You need to read the fine print as well. Some people will get loans secured against assets. These are small businesses or people who are not salaried, people who don't have regular incomes. So you need to also read that. You also need to have, and that's why we tell people to buy these plots, because these plots can be able to help get you these loans. You can use them as collateral so that you can be able to get those loans against a business that is making money but is not regular. The bank may not be able to trust your business, but they can be able to ask you for collateral to cover up, to mitigate against the loss should you maybe default on the loan. You also need to check the charges of the loan, some charges, and these are interest. The other charges like insurance, the arrangement fees, you need to check this. Some banks are very expensive, others are fairer. You need to also be able to check this. One of the things I would tell you about taking loans, there are so many people who have been able to get wealthy and they take loans all over. Even big companies, they take loan. Almost every one of us might have a loan somewhere. One of the things I would tell you, use the loans you take to build wealth. Not to say you can't take an emergency loan tomorrow when you go to the supermarket and you need freezer, but the basics are very simple. Of course, you take it, you know why you are taking it, once in a while. Then you pay up very fast to avoid those high interest rates. But the eventual objective, if you are making an income, ensure you put so much money. If you are taking loans, put them to be able to generate more for you. And that is the principle. Put them to invest, take loans to invest, take loans to be able to make more money for you, take loans to be able to buy assets. Assets are things that make you money. That is very important, and I would like to stop at that, and I believe you can be able to take a loan. You have the basics of doing this and be able to invest. Username Investment offer very affordable properties as a way of investment. You can consider there are many other properties companies there. You can buy affordable plots, you can buy houses. There are many options in the real estate sector. Thank you so much. I believe you have been able to benefit from this video. Subscribe to our YouTube channel, engage us there. We can be able to answer you on any question in real estate that you ask. Please also contribute and share with your friends.